How are you doing, family? I hope everyone is keeping well, keeping safe, and I hope everyone is trading safe. Now, this is a question that I get asked over and over again in Telegram. So I just thought I'd address it with a quick little video. Now, again, quick video, okay? Because I don't want these videos to drag out, 15, 20 minutes long. I try to keep it as quick, short as possible, yeah? And once you watch it, test it. If it works for you, use it. If it doesn't, don't use it. Simple as that, yeah? So it's essentially the how to enter, right? So one of the entry models that we use is a change character. It's a change character entry model. Yeah. Now the question is so I'll just draw it out. I can delete this now. I'll just draw this out a bit more clearly. So we've seen that breaking structure. And we have a POI within premium situated nicely to sell. Remember, this is our strong high, this is our weak low, this is targeted, this is protected. Yeah. Now, I'm not going to go into too much details about other things, just strictly going to speak about this entry model and how we can use it. Yeah. So one of the things that we can do is when price pulls back into this POI, what we can essentially do is scale down to, let's say, the 1 minute. So let's just say this is a 30 minute. We can scale down to the 1 minute, yeah, or the 2 minute, or the 3 minute, whatever time frame is comfortable for you. Scale down to that time frame and wait to see a change in character, a liquidation and change of character. So what you essentially want to see is a liquidation followed by a nice change of character. Now this essentially suggests to us that potentially this pullback is potentially over. We're within a POI. You've built that story in of looking to sell, looking to continue selling, and now you've seen your entry criteria being met on the 1 minute. Yeah. Now essentially all this means is you're going to get into potentially tighter entries. Not always, by the way. Just because you use the 1 minute doesn't always mean you're going to get into tighter entries. Yeah. More often than not, it does. Yeah. So that is like a little advantage if you see it like that. Now, at this point, you place your limit. And what we're expecting is price to come back into this and then go. Yeah, so that is one way of doing it. You can scale down, no problem. Absolutely no problem. Yeah, and you're probably not going to wait as long as if you stay on that time frame. So let's say you're using 30 minutes or the 15 minutes, whatever it is. And if you stay on that time frame, you're essentially looking for the same thing. You're looking for liquidation and you're looking for change character. Now, this is actually more confirmation now because that higher time frame has now shifted. That higher time frame has now. So we're bearish from a swing standpoint, and from an internal standpoint, we've now shifted when we've seen that change of character. So this is going to take slightly longer to develop because it's a higher time frame, yeah. But essentially, it's a bit more confirmation. But you're looking at the same thing. It's the same thing you're looking at. The entry model does not change. And at this point, so we've got that change of character, and you're essentially going to look to place your entry here to continue to ride that wave down. Now, another thing is you're probably going to have, more often than not, it's probably going to be a larger stop loss than if you're going to scale down to, let's say, the 1 minute or even the seconds. Yeah, so let's look at a couple of examples. I'm not going to put a lot of context into it. I'm just going to purely just focus on the actual entry aspect of it. So guys, remember, as always, make sure you have context to what you're doing. Yeah, understand what your swing structure is. Things such as cause here, is there cause to trade towards, what's the expectation of order flow, so on and so forth. I'm simply going to speak about the entries and scaling down and not scaling down, right? So let's say we've got a POI in here and we come into that POI. So let's now scale down. Let's look at this example first. Let's scale down. And what we want to see, so we've seen that liquidation. We've seen that clear liquidation into the POI. Now what we want to see is the lower time frame, so i.e. the M1 in this case, start to shift. Yeah. So now we've got that change of character. We've also got that change of character. Yeah. Now it's our job to find out the CHoCH created demand, CHoCH created supply in this example. And another thing I will also say is we've seen multiple levels of demand start to fail. Yeah, which is a great sign suggesting that supply is back in control. Now, another quick little tip here. You don't need to go ahead and refine your POIs to this wick, yeah, or into this little inside bar. You don't need to do that. Yeah, you don't need to do that. Understand, even having this sort of candle here, which is essentially where this whole move originated from, even then you're still getting away with like a 3, let's just say a 4 pip stop loss, which is still really, really good. Okay, so from here, another thing that I should say is we've got liquidity, so inducement into that POI, which is also really good to see. So again, this is just context being built, and from here, this is how we can look to scale down using our lower time frames and get into these tighter entries. So I've just jumped onto the 30-minute time frame here to show you guys an example of not having to actually scale down, right? So we've now, again, remember guys, put context to this. Put context to this. I'm just simply picking out this example for entry purposes, yeah? So in this example here, price has now come into this POI. We've taken out liquidity. Yeah, so we've seen that first aspect that we need to see. Now we need to see that change in character. Now, like we've seen before, you can always scale down to get in tighter, right, at around these regions here. But if you don't have the time, or if you just want to see that extra bit of confirmation, just wait on the higher time frame, okay, or whatever time frame you're using. When you see this change in character, when you've now seen this change in character, just look to follow that chain. Just look to follow that chain. Yeah, and it's essentially you're doing the same thing. Price then comes back in, and then off it goes. Yeah, so to answer the question of do you have to scale down, you definitely don't have to scale down. Yeah, there are pros and there are cons for both of these. Okay, for both of these. And for example, let's say you missed your entry from here. Let's say you did scale down, you missed your entry from here. Once you see that higher time frame now start to shift, that's when you can potentially look to get in again, and so on and so forth. Yeah, so these are things, guys, just you have to test and understand and see if it works with your plan, and then use it accordingly. Yeah, so I hope you guys took some sort of value from that. As always, if you've got any questions regarding this or anything else, just give me a shout on Telegram or Instagram. Now, I don't think I've done a marketing thing on this yet, so if you guys do like the content, give it a like, give it a share, and if you've not already done so, subscribe to this channel, and I'll see you all on the next video.